Good afternoon, everyone. I am Neha Behel, the Company Secretary and Compliance Officer of RACL Geartech Ltd. On behalf of the company, I would like to extend a warm welcome to all of you to this post-result conference call for the second quarter of the financial year 2025-26. I will be your moderator for today's session. Before we begin, I would like to make a few important announcements. Please note that this conference call may include forward-looking statements based on the company's current beliefs, opinions, and expectations. The statements are not a guarantee of future performance and are subject to various risks and uncertainties, which may cause actual results to differ. Additionally, all participant lines will be on mute during the presentation, and we will have a question and answer session at the end of the presentation, where you can ask any question that you may have. If you need any assistance during the call, you can submit your question via Q&A box or raise your hand as per the available options on the screen, and we will assist you accordingly. Please be informed that this call is being recorded. We are pleased to be joined today by the management team of RACL Geartech Ltd, represented by Mr. Gursharan Singh, Chairman and Managing Director, Mr. Jitendra Jain, Chief Financial Officer, Mr. Prab Mehar Singh, Chief Operating Officer. With that, I now invite Mr. Gursharan Singh for his opening remarks. Over to you, sir.
Hi friends, good afternoon. First of all, greetings in this brilliant weather from North India, but I know most of the people are from Mumbai, but still Mumbai weather is also very pleasant these days. So please have a enjoyment of this lovely weather. So in fact, our team will really run through the complete operational information and how the past and how the future looks like. But I just wanted to initiate the meeting with an open discussion. Yes, things are really looking very good. Indian economy is a really resilient economy. Things are really getting better by each passing day, each passing quarter. And globally also, despite all the challenges, global situation is also improving a lot. So we really see that coming year 2026 will be full of opportunities, full of new avenues to improve. And yes, of course, with as our quarterly initiative of being in contact with all of you, investor fraternity, that will always go, will keep you updated how the future will look like. But just for to start with, I will hand over to Prab and Jitendra Jain to first initiate complete information of the performance of the past quarter and business scenario for the future. So yes, over to you, Jay and Prab.
With that, we will start today's presentation with a brief introduction about the company. It is my pleasure to introduce RACL Geartech Ltd and share an overview of what we do and who we are. Our journey began in 1983, and since then we have grown into a trusted engineering and manufacturing partner. We are based in New Delhi, registered with DUNS, and proudly headquartered in Noida, India. We are a publicly listed company on both BSE Limited and National Stock Exchange of India Limited, and also have an Austrian subsidiary. Over the years, we have built a strong infrastructure that supports our global operations. Today, we operate 2 manufacturing locations, a corporate office, and 3 warehouses in Europe. Our team comprises 869 dedicated employees who contribute to our collective success. Our products serve a wide range of applications across industries: 2-wheelers, 3-wheelers, passenger cars, commercial trucks, ATVs, agricultural equipment, and industrial gears. Our product range includes transmission gears and shafts, sub-assemblies, precision machine parts, chassis parts, and industrial gears. These offerings are backed by our deep core competencies, which span gear cutting, precision machining, aluminum machining, process R&D, and concurrent engineering, heat treatment, sub-assembly, laser welding and laser cutting, as well as export logistics handling. We proudly support 22 active customers with over 900 SKUs, demonstrating our capability and versatility. In financial year 24-25, we recorded a revenue of INR 4.27 billion, reflecting a strong business performance and customer trust. Financially, we continue to maintain a strong and positive outlook, supported by an A- credit rating. Quality and compliance remain at the heart of our operations. We operate under all essential global quality, safety, and information security standards, including a TSAX rating of 2.8 and permanent label certification, reflecting a strong commitment to excellence and operational integrity. As we move forward, we remain dedicated to innovation, precision, and customer satisfaction. Our legacy of more than 4 decades continues to inspire us to reach new heights. I would now request Mr. Jitendra Jain, Chief Financial Officer of the company, to take us through the financial performance for Q2 of the financial year 2025-26. Over to you, sir.
Thanks, Ed. Good afternoon, everyone. So I'll present the financial performance for Q2 and H1 for the financial year 25-26. So in Q2 of financial year 25-26, we clocked a turnover of 122.84 crores, out of which close to 89 crores was exports and close to 22.5 crores was domestic turnover. The other operating income was 5.83 crores and other non-operating income was 5.56 crores. So in totality, 122.84 crores of turnover. This is a slide on the business segment. So for this particular quarter, our export contribution was close to 72% and the domestic turnover was 28%. Yeah, so this is YOY standalone Q2 performance. So Q2 of financial year 25-26, we clocked a turnover of 122.84 crores as compared to 105.71 crores same quarter last year, which is representing a growth of 16.2%. Our EBITDA in absolute terms have grown from 22.27 crores in same quarter last year to 29.79 crores in Q2 of financial year 25-26, representing a growth of more than 33%. In percentage terms, the EBITDA has grown from 21.06% to 24.25%. Accordingly, the PBT has grown from 6.75 crores to 16.13 crores, representing a outstanding growth of close to 139%. On percentage terms, it has increased from 6.38% to 13.13%. This slide is comparison of Q1 versus Q2 of current financial year. So current financial year, our turnover, we have achieved a turnover of 122.84 crores in Q2 as compared to close to 108 crores in Q1, representing a growth of 13.78%. On EBITDA, we have earned an EBITDA of 29.79 crores in Q2 of current financial year as compared to 26.8 crores of Q1 same financial year, representing a growth of 11.15%. In percentage terms, it is almost flattish, 24.83% to 24.25%. However, PBT has grown from 11.25 crores to 16.13 crores in Q2 as compared to Q1 of this year, representing a growth of close to 43%. In percentage terms, the PBT has grown from 10.42% to 13.13%. This is standalone half-yearly performance YOY comparison. So in current financial year, in H1, we clocked a turnover of close to 230 crores as compared to 211.51 crores in H1 of last year, representing a turnover growth of 9.11%. EBITDA, we have earned EBITDA of 56.6 crores in H1 of this financial year as compared to 44.6 crores as compared to H1 of last year, representing a growth of 26.66%. In percentage terms, EBITDA has grown from 21.09% to 24.52%. However, in PBT has grown from 15.18 crores to 27.38 crores in H1 of this financial year, representing a growth of close to 80%. In percentage terms, it has grown from 7.18% to 11.86%. This is the consolidated half-yearly performance YOY comparison. So on a consolidated basis, we have clocked a turnover of 234.56 crores in H1 of this year as compared to 219.71 crores of same period last year, representing a growth of 6.75%. EBITDA has grown to 56.82 crores from 44.23 crores same period last year, representing a growth of 28.46 crores. In percentage terms, it has grown from 20.13% to 24.22%. PBT has grown from 14.68 crores to 27.45 crores in same period last year, representing a growth of close to 87%. In percentage terms, it has grown from 6.68% to 11.70%. Next. So this is the snapshot of basically various financial ratios on a standalone basis. This is for everyone to look at. I just want to highlight 2-3 points here. Our cash from generation has grown from 19.81 crores to 29.87 crores in H1 of this year as compared to H1 of last year, representing a growth of close to 50%. As you all are aware that in Q1 of this financial year, we had raised a preferential money through preferential allotment, and that entire money was used to reduce the both long-term and short-term debt. So accordingly, our overall total debt has come down from 305 crores to 218 crores from 31st March till now. So which is a decrease of almost 28%. And accordingly, most of our financial ratios have changed significantly. Our debt by equity is close 0.67. Fixed asset turnover ratio, which we always discuss, so it has improved now from 1.33 to 1.45. On a half-yearly basis. But ratios is on yearly basis. And DSCR has improved to 1.68 times. And the right-hand down corner shows the profitability ratios and return on equity.
Actually, you have to use this gray color. The see doesn't reflect.
This one?
Yeah.
Background,
yes.
Okay. We note.
Use always yellow and
Okay.
right.
Okay.
So numbers 15.
Next. So this is the profitability comparison, which we always share on a standalone basis. So this is the breakup of difference in EBITDA and PBT from Q2 of 24-25 and from H1 of 24-25. So as I had shared that our EBITDA has from Q2 of last year, EBITDA has grown by 3.19%, and from H1 of last year, it has grown by 3.43%. But this is the breakup of basically how this, from which all heads it has, this growth has come in. And we have been able to consistently maintain our EBITDA margin above 24% from Q1 and Q2 of this year.
Yeah.
So this was the basically financial performance, both quarter on quarter and half year to half year. Now we'll come to the business updates for last quarter. This slide, sir, if you want to take it, technical collaboration.
Yeah, you could just give the
So
overview and we can.
Sure.
So
as we have shared, so we are proud to share that we have done a technical collaboration with the German entity called ARC Engineering GmbH. Now this technical collaboration, ARC Energy GmbH, they are basically expert in product designing, prototyping, virtual simulation, testing, validation. So till now, RACL was doing a prototyping and all, but we were not doing the product designing and all. Now with this technical collaboration with ARC Engineering, now we will have a capability to do the product designing right from the inception of the product.
I'll just add what JJ has told. In a real business language, we say, until now we were doing build to print. Means technically customer gives the drawing, we do the entire activity, right from prototyping to sample development to pre-series and of course mass production. Now with this new technical collaboration arrangement with the German company ARC Engineering GmbH, so in our business language we call it concept to print. So now a customer will not give us the drawing. He will say, okay, look, this is a vehicle. This is the power, this is the output required, this is the how many speeds are required, and this is the load characteristics. So we have to design the component, we have to create the concept, we have to select the raw material, we have to select the heat treatment process and all such things. And then eventually we have to create the design. And in this case, then we are responsible for the overall product fit for function. Until now, we are responsible for fit for function. Now we are responsible for even the design, and we are responsible for the entire material selection and so on. So this really puts us into league of many advanced companies who are really able to offer this service to the end customer. Reason behind this was because Europe is gradually now shifting its focus on the vehicle design to the component design level. They are really expecting the suppliers should get upgraded to this. So this is a kind of initiative which we are starting. And right now we are talking to some customers to take it forward. And eventually in coming time, some positive results will come out of this. So just to add from us.
Thank you, sir. So just to add, now this is basically a stepstone in our journey to move up the value chain from being a component supplier to end-to-end engineering and industrialization solution provider. Next. So this is the new business nomination. I'm really proud to share that your company has received second nomination for transmission parts of a gearbox assembly from one of the largest premium two-wheeler manufacturer in the country. Now, this is the same large premium two-wheeler manufacturer from whom we had got our first order in the last quarter. So I'm happy to share that we have got a second nomination now from the same OEM for the transmission part of a gearbox assembly. This project again falls under the high volume business segment for the new engine category, which is currently not available in the market. And I'm happy to share that this project we will be executing at Gajrala plant, and the SOP is expected to start from July 2027.
And just to add over here what JJ has added, of course, we have got the new business nomination for the second project. First project has been very, very successfully developed and the sample submitted to the customer. Right now, the situation is the samples are under testing at the customer end, and very shortly we'll be starting the mass production, and this will be additional business revenues in coming time. Yes.
Thank you, sir.
Please continue.
Next. So this is regarding external credit rating. So I'm happy to share that again this year, our external credit rating has been reaffirmed by CARE as A- for long-term banking facilities and A2+ for short-term banking facilities. But I'm happy to share that they have revised the outlook from being stable to positive. So that's an upgrade on the outlook side. One more thing which I want to highlight here is that this time we have got the overall facilities rated of 273.38 crores as compared to 336.93 crores which were rated last year. So which represent a total decrease of close to 63.5 crores. And this facility also includes the fresh term loans which are supposed to be disbursed this year, which are not disbursed till now. So overall reduction of 63.55 crores. Next one. As you all are aware, so we have a strong focus on environment, social, and governance as well, in addition to the manufacturing capabilities and all which we have. So I'm happy to share every year from last year onwards, we have started getting our company rated from a ESG perspective from a very prominent player, Dun& Bradstreet. So we had got this exercise done last year where they had rated our entire company on ESG platform, both all on environmental, social, and governance. I'm happy to share that they have done the ESG rating this time as well, and we overall our company has been rated as medium in their overall category, and we have also been rated medium in all the three categories, which is environmental, social, and governance. So this is back to back 2 years we have been rated as medium by Dun& Bradstreet. So these are some of the events which we want to share with all of you. So as a ritual, every year we conduct a shareholders plant visit. So this year again, this was a third annual plant visit for shareholders, which we conducted on October 15, 2025, where our shareholders get an opportunity to visit our Gajraula plant. They spend the entire day at our factory premises. They take an entire round of all the plants, our manufacturing capabilities and all, and get a sense of what exactly we are doing at the ground level. This initiative we have been doing for last 3 years, and it has got fantastic response from our shareholders. This time again, I'm happy to share that shareholders from across India has come right from Chennai to west and to north, from north. So from everywhere the investor shareholders have come in, and it was a great learning experience for us as well. And they also got an opportunity to have an interaction with the management and discuss everything and get the on-ground experience of what we exactly do. Second thing, this time RACL has participated in Defense Manufacturing Exhibition. Now this exhibition, Manufacturing Conclave, has happened at Jabalpur between 7th to 9th of November. So we participated in this exhibition this time. The response to our participation was fantastic. We got a lot of interest, and we got an opportunity of engagement with from various industry stakeholders and other stakeholders. One of our directors, Mr. Bedi, Brigadier Bedi, was present there in person along with the marketing team. And this platform was an excellent platform for us to showcase our capabilities and all to the world. And also we got an opportunity for networking and other opportunities in the defense sector. So
Yeah, just to add, this is a kind of initiative which we are eyeing to get entry in a sustainable level in the near future, because India is fast becoming a manufacturing hub for defense manufacturing. So this is a kind of initial first step we are trying to take into this. Let's really see how it takes it forward. Yes.
Questions. So this was the presentation from our side. Thanks a lot, everyone, and over to you, Neha.
We'll start with the question.
Well, जो question आया था,
Yeah, hands raised करके you can start with
I think Dheeraj ji है first. Dheeraj ji.
Dheeraj.
बोल दो, ठीक है, बोल दो.
Mr. Dheeraj, you may ask your question, Mr.
Hi,
Dheeraj.
hi, Professor. Hi, question, sir. So I just listed down my questions on the chat. If you can probably like answer those, that would be very helpful.
Yeah. So
in the interest of time.
Dheeraj, where in fact we got your question from the email also. So I'll be very transparent and honest with you. Yes, we have already declared that we got 2 nominations from the customer, but normally it is not part of the strategy to disclose the strategy of ourselves another strategy of the customers. You know, customers also, if they give business, they have a very, very strong diligence of the company before nominating a supplier. And you know, gear is not a commodity that any Tom, Dick, and Harry can really develop this product. So if they have nominated us, they have their own strategies and they have their own thought processes. Some of the strategy and thought processes are known to us, but then some of even confidential to us also. But even whatever are known to us, we are bound by a bit of confidentiality and we are not able to give on a public platform. But this I can really tell you that here as a community is always a very, very long-term relationship because changing a supplier or adding a new supplier, first of all, it takes almost 6 months to 1 year of initial diligence. I tell you, we never had a relationship with this customer prior to 2025. And I do not remember how many visits my colleague Prab and all others have taken from our company and how many visits have been taken from the customer. If not less, at least 20 people from that company have visited us. So it's a very, very long strategy. So really, we are not in a position to give the strategies, but this we can really show. Okay, yes, ours is a very, very long-term and strategic business relationship. It's not really a customer-supplier relationship. It is strategic business relationship. So I hope I
No,
have
no,
been able to
I
clarify.
understand, sir. But just wanted one more add-on point on top of this, which is, are we a sole supplier to this component, or is it like we are one of the two suppliers?
No, we are actually not supposed to divulge this on a public platform, but yes, whatever
Okay,
parts are there, they will be of a strategic relationship. It is not that, okay, if they are needing this, they take it from us or they do not take it from us. No, it's a long-term relationship because we are also investing money. You know, our company strategy is very clear. We never
yes, sir.
invest even a single penny until we are not sure what the business. So you can really take it from here. If we are investing money and we're investing pretty good money on this business, we will not invest until we are 200% sure for
Understood, sir.
this.
No, no, very,
However,
very clear, sir.
beyond
And
this,
got it, got
thank
it.
you.
Sir, in the last con call, Prab sir mentioned about parking lot mechanism, the contract which we got with BMW, and also Prab sir mentioned that we can also offer this to other OEM players, if I'm not wrong, right? I mean, at a later stage. So what does it exactly mean? Because from a design standpoint, if BMW is giving us parking lot mechanism product, can we also, because now we have capability for this product, can we sell this to, I mean, can we also help other car companies with this product, or how does it
No,
exactly work?
I feel there was there is some misunderstanding in this topic.
Yeah.
What Prab might have mentioned.
Maybe I can explain.
Yeah, if you can explain.
The point was that parking lot mechanism as a product, every architecture will have it, electric car platform. So it is not that whatever we are making tomorrow we can pack for other customer and they can put in their car. That's not how automotive works. But in terms of the skill set, in terms of validation, in terms of having a strong testimonial for similar projects to flow to us, which might have similar application, helps to gauge that kind of business RFQs from other customers which might have requirements for similar things. So that's how it becomes, and we become one of then the preferred choices because we then have a testimonial and a capability to deliver.
You know, parking lot is a system because it's not that the part which we are developing or the customer BMW which has given the parts, we can sell this to any other customer. No, it is their proprietary item. We're just working as a supplier. But parking lot is a very, very safety critical part for the vehicle. And many electric cars, fuel cars have this. Idea is that if we are now qualified as a like we are a gear manufacturer. So moment any new customer is wanting, they know, oh, we are gear maker. So they will come to us and we are a preferred supplier as a gear maker. Now we are a parking lot system manufacturer also. And you can imagine that we got the business of parking lock mechanism, and BMW is one of our first customers. So any new customer will always get attracted. Oh, this is a company who has the expertise in making parking lock systems, and their first customer is BMW. So all repeat customers will get attracted. This is actually the meaning. But obviously, it's very clear. This product is a proprietary product for this particular model. Because every car has their own design. Nothing can be cut and copied like this. Okay, maybe I think there are many others also. So you have any other questions? Maybe you can write through email. But our other let other members also get a chance to ask their questions.
Thank you. Launch.
Mr. Yogansh?
I think page 14 number one car.
इसको ना ये क्रॉस कर ये ऊपर से क्रॉस कर हाँ पेज पर
Mr. Tej?
allow mic करो
So now you can do yourself.
Yeah,
One.
hello sir, am I audible?
Yes,
Yes.
yes, Mr. Tej, go ahead.
Perfect. Thank you so much for the opportunity, sir. So my first question is, in terms of why am I growth 15%? How
Mr.
much was
Tej,
it
can you
due
be
to the?
little, Mr. Tej, can
Yeah.
you be little louder? Can you be little
Yeah,
louder?
yeah.
Your voice has a lot of echo.
Now,
Your voice has a lot of
now is it
echo.
okay, sir? Now is it okay?
Yeah, please proceed.
Yeah. So I'm asking, sir, how much of this 15% growth how much of it is attributable to the euro appreciation against INR when I compare it Y and Y?
Your voice was echoing. Your voice.
नहीं, वो कह रहे हैं जितनी 15% ग्रोथ आई है इसमें से कितना आएगा यूरो का appreciation?
So turnover growth. So basically, if you look at, I mean, on the non-operating income side, so basically we apply the accounting standards. So accounting standards takes care of. So we have been. Hello,
Yes, sir.
am I audible?
Yes, sir, you're audible. You can continue.
Just one second. Just one second. क्या किया है?
चल रहा था?
Yes.
It's working.
Yeah. So basically, yes. So as per accounting standards and all, we have been benefited from the euro appreciation, but then at the same time, we borrow in foreign currency as well, both on the long term side as well as the short term side. So then there has been some hit on that side as well. But so overall, if you look at the picture is then about the overall euro in H1. It's about between 8 to 10 crores of impact that was there of the currency thing.
Okay, okay, got it, got it. And sir, in this quarter, and probably the next last quarter, a couple of projects were, supposed to start. For example, the parking lot mechanism, the TVS project, and ZF project, also the steering gear one. So if you could help us give an update, are the things on time, according to timelines, or have few projects been, let's say, delayed, or the timelines have changed. So I think there are a total of 4 projects which are supposed to start maybe by the end of this quarter or Q2. So if you could just give an update on that.
I will just clarify. First of all the projects are very well on time, and that is really reflecting that on the second quarter we have been able to achieve growth. So that really reflects that progress on time. But probably we'll just correct you. Some of the projects like parking lot mechanism, BMW and all, they are not starting this year. They're starting next year. Right now, their pre-series phases are going on. So that is also adding to the value because the pre-series phases are also of quite good numbers. It runs into thousands. It's not that only 50 or 100 cars they produce thousands of cars. So then eventually that also is added. But yes, all projects are exactly on time. So there is nothing is now.
Sorry, sir. It was my mistake. I get it. It was 2026, but I think the TVS project was supposed to
Yes.
start by the end of this calendar year,
You,
right?
you might have already witnessed TVS has launched this bike in EICMA exhibition in Italy. And this is the
Okay.
first time I think that two top models were launched, had a global launch in EICMA in Italy, where TVS had launched a new vehicle called RTX 310. And then they had launched a Norton brand as a global brand. And I'm proud to say that both the models had products from our company or your company.
Great.
And now mass production of that RTX 310 is already starting. Already has started. In November, they have produced a couple of hundred motorcycles. And November, December always these customers will not put the product too much in the market because of the model year changing. Because January, the model year 26 will start. So from January 26, we are pretty hopeful that volumes will start picking up. But mass production has already started for this TVS project. And Norton project, you all are aware, our Honorable Prime Minister had launched this
Yes.
motorcycle while our British Prime Minister, Mr. Starmer, was in India. And in fact, yesterday also there was a news item that Norton is now planning that even 1.2 liter motorbike to be launched in India in May 2026. And I'm again proud to share that all those bikes are with parts supplied from your company.
Got it. Perfect. Thank you, sir. And sir, this second nomination which we have received from one of the recent Indian customer, is it for the same SKU or is it for some different part?
It is, which is confidential right now, but it
Okay.
is going to be in the premium segment.
Got it. Got it.
Our domain is always into the premium segment because where customer is very, very particular about the quality, very, very particular
Got it.
about technologies and the sustainability and all that stuff. And it's all premium segment. And yes.
Got it. And sir,
Okay,
last
thank
question,
you.
if you could, can I just ask the last question if possible, sir, please?
Yeah, please.
Sir, if you could just help us understand, at broader level, I think, what's happening in Europe right now, your interaction with, let's say, BMW, ZF, which were probably, let's say, I think ZF was not doing up to what we expected, but I think the numbers have started to improve a bit. So any improvement there in Europe and, particularly, let's say, ZF, and I think KTM also started production, but I think we had a very less quantity. So any update on Europe as a whole and, on few particular clients?
We're too small to predict on the global economies, but our assumption and our experience and our thought process is that globally, Europe had achieved a plateau in 2024 and 2025. So whatever now is going to happen, it is going to happen in the plus direction only, because of late, thanks to the global and geopolitical scenario, Europeans are spending in a big way into infrastructure projects, particularly in the defense projects and particularly in energy sector. So in defense and energy, there's a big demand going to happen. So this really gives a lot of boost to the what we call logistics segment, like trucks, commercial trucks, then eventually people. So eventually these things are really looking up. And you also know it that euro has appreciated against dollar in past 6-7 months by almost 6-7%. So that really shows that European economy's resilience coming into shape. And Europe is also all put together. They have pretty big size of economy, overall economy. So they are really, yes, they face a lot of complications. But I personally feel in automotive segment, or I'll say in the commercial trucks of this business, things are going to look up and show a positive outcome.
Got it. Sir,
Thank
so
you.
any revision? Okay, no problem. Okay, sir,
Thanks,
thank you
Tej.
so much.
Please, we have a lot of people waiting now.
Yeah, no
Please.
problem. Thank you so much.
Thank you. Thanks, Tej.
There was Mr. Jiswani.
Rugansh.
Mr. Yogansh, you may ask your question, please.
Hi, thanks for the opportunity. Am I audible?
Yes, Yogansh. Go on.
Yes. So firstly, congratulations to the entire team on winning another order from this domestic two-wheeler company, and that too in such a short span of time. So that speaks volumes about our capabilities. So big congratulations to the team, and hopefully this another order will take us forward on our volume growth and value growth that we are anticipating. So, sir, uh, coming to my questions, so sir, can you talk about what would be the capex spent for this year, and similarly, given these new projects wins that we announced in last quarter and then again this quarter, what would be our capex spent for FY26 or FY27 broadly, if you have any figures in mind?
I think for FY26, we have already announced in our calls that total spend will be about 50 crores. Yeah, about 50 crores. And now it's almost towards the end of the year, and we are going to maintain this and maybe a crore or so less than this, not higher than this. But definitely, this is taking care of our current year's production, and gradually it will take over the next year's production. But definitely for FY27, we are still compiling all the numbers and all. And definitely in next quarter or maybe next call, you will be having some insight on this. But yes, as we always say that CapEx is because gear making is a capital intensive industry, so we have to keep on investing. And in parallel, we have to upgrade our old obsolete technologies also. So like we had a massive upgradation in our machining setup, even forging setup. Now in coming year, we have to invest a lot of money on upgrading on our heat treatment setup. Because now our heat treatment is also coming towards end of life. In fact, it has already come towards end of life. So we are planning all these strategies, and this is how we really keep ourselves upgraded on the available technologies. Now, of course, preparing for the future mass production. So wait for a few more months, maybe hopefully by next quarter when we do our investors call. So because CapEx has to be first approved by our board of directors, only it can be made public. But yes, our France team and project team is really working on it. Huh?
But to add on that, Yogansh, basically capital capex is a need of the hour, which is always the case. However, in the last year or so, you might have seen, now we will witness in numbers as well. Most of these new projects, whichever we are bagging, are not that high capital intensive because they're also then generating good project turnover. So that fixed asset turnover ratio to the sales will also improve because in domestic business, gestation periods are smaller. And many of these projects, so that last capex cycle, what we had was for ZF. That is where some sluggishness came in. But for the BMW capex, what we had a year and a half back are working fine. Now, when the BMW production starts, it will generate good turnover. So we are also going to generate good operating cash flow in the coming year. Even now, you see our operating cash was higher by 50%. So that addition to debt will not be that much as it was in prior because cash flows accrual will also take care of the requirements of capital expenditure, which should not be too much borrowed. So it is a good sign. Capex means company is growing. That is something which sometimes becomes a question, but since internal accruals are also increasing because of higher operating cash, so I think it will be a good scenario in a couple of years.
Fair enough, got it. So I think my second question was on debt only. So partly you have answered that operating cash flow are going to help. So broadly, sir, do you see the debt level at least for next 1 year will stabilize at this level, or we might need some debt for working capital? That is fine. But on terms
Net
of
debt will all net debt will always reduce. So that is very clear.
Yeah, but Yogansh, one thing, Yogansh, one thing I want to highlight. So, I mean, you can also see, I mean, the overall debt which we have got rated from CARE. So that is so. Anyways, my overall debt cannot surpass that amount. But I will put it up in a different manner. our endeavor is that from now on, our debt by equity should not cross 1. That's what we will try.
Don't give numbers to them and they will. You have not learned anything.
Yeah, I always tell the banker that that is not a dirty word. Only the
Just tell them
yeah. And it should generate revenue. That should not generate revenue for the bank. It should generate revenue for us. But definitely, you guys, to answer you,
Yes,
that we always maintain this, and in future also will maintain. We will never, we as a company has a very, very clear strategy that RACL will not spend any capex in anticipation of the business. Because many industries, I know as investors, you guys always have a doubt, oh, company raises debt. You know why companies really fall into a trap? That they invest, they create the plant, and then they start hunting for the business. And then eventually, if you don't get the business, then your clock is ticking and you end up in a problem. Second is, moment is customer knows that this supplier has a free capacity, they will squeeze you to your last drop. Ours is a different case. Our marketing guys are telling very clearly to the customer, look, we don't have the capacity. This is our price. We have integrated setup, we'll give you a sample. By the time you test your sample, we'll create the plant. So that is a safeguard with us. Even if we raise the debt, it will start generating money. So that is a very, very safe course, even if we raise the debts. Okay. But as JJ has said, that our target is that not to take the numbers of the ratios to we forget the dangerous level, even at the threshold level also. We should always try to keep the debt equity ratios or our price to debt ratios or price to equity ratios in a positive manner.
point
I
well
hope I've
taken.
been able to. Yeah, thank you.
Yes,
Thank you.
yes.
Thanks, Subhash. Thanks.
Yeah, thank you.
Take Abhi sir. I think he's waiting for him because Sanjay has come. Take Abhi sir.
Mr. Ravi, sir.
Hi, Avisa. Good afternoon. Good to get you over here. Huh? Hello?
Log out हो गई. Abhi sir, can you unmute yourself?
Hello?
Hello.
Avisa, you are not audible.
तो माइक डिसेबल करके फिर से क्यों?
Unmute.
Can you do it?
Abhi sir, can you try now to unmute yourself?
ये देखना है एक अनम्यूट नहीं हो रहा है.
यहाँ ऑप्शन नहीं आ रहा.
Maybe you can write the question in the chat window and we can,
Abhi sir, can you write your question in the chat window?
or you can log off and log in. You can do.
He can write.
Is
Take her next. Yeah.
Mr. Sanjeev? Mr. Sanjeev, you may ask
Yeah,
your question.
Yeah, hi. Thanks for giving the opportunity, sir. Sir, I have a few questions and pardon the naive nature of the questions. They're very basic. So my first question is, sir, I'm assuming that, for most of our machine parts, we would be using some sort of CNC machines. And while I was reading, some literature on CNC machines, they are becoming very advanced and automated to the extent that, you just feed the coordinates, how you want the precision gear or any machine part, how you want the coordinates and the shape of that part be, it delivers. All you have to do is feed in the instructions and it precisely machines and whatever processes. So my question was, sir, given these sort of CNC machines exist in the market, if you could just throw some color on how RACL differentiates itself when it comes to precision, gears or precision equipment manufacturing versus someone else who can tomorrow buy these advanced Japanese or European automated CNC machines and also deliver, probably similar products. So if you could just throw some color how adoption of these automated CNC
I'm first
machines.
of all glad that it's no more a financial call, so it's a technical call. So, and I really feel happy in answering all these technical questions. But I'll tell you, to answer you, because CNC machine is a very, very basic nomenclature, but CNC has a very, very long technology and a range. And since you asked a very, very technical question, CNC machines are available as low as 10 and 12 lakhs rupees also. And in
Right.
Faridabad sector, people have put these machines even into the shops and even their
Correct.
backyards of their houses. But
Correct.
first of all, this technology, what you call it, CNC is just a kind of technology. But there is a 2 axis, 3 axis, and we have our machines which are as high as up to
6
11
axis.
and 13 axis machines also,
Wow.
not even 6. We have some
Okay.
machines which are 11 axis and 13 axis. Now,
Okay.
that is again, you said very rightly, anybody can buy that. Okay. And then
Right.
starts producing it. But
Correct.
technology alone cannot really produce a product, irrespective gear, anything. It needs lots and lots of expertise. It needs lots and lots of knowledge about the cutting, knowledge about the raw materials, knowledge about the heat treatments, and a real experience that what happened in the past. In today's world, time is really so short. People do not have now time for experimentation. People expect that part should be first time right. It's not that, okay, you have submitted a sample and then they fail and you say, okay, okay, no worry, we'll give you new samples. No, they don't have the time. So eventually you need a lot of sort.
Understood. Understood.
What is available on a computer, anybody can buy. But whatever is available, human brain, that, okay, AI is there now, start replicating the human brain also, but still it has long way to go. So, it's a combination of many, many things. So we have certain USPs, which actually do not, everybody and anybody can't have it. Like on the CNC's technology, like we have certain technologies now, you feed the drawing and machine tool will design the tool path. Machine will suggest you, okay, these are the various strategy of the cutting you have to really choose. Now, which strategy to choose, which tool to use, here lies the experience of the person, experience of the team. So it is a combination of many, many such factors. But yes, in fact, I will suggest you, what's your name?
Sanjeev Marwa.
Sanjeev Mahava. So my kindly keep a note of it. My suggestion will be, whenever there is a next investor's physical visit to a factory, please join
I'll surely do so.
that visit. We will
Yes.
be able to showcase you that what all USPs we have, which I can't say that others can't replicate, because I have also replicated from somewhere. But
Yeah.
it is difficult and challenging to do it. But yes, it is an open world. Today, I cannot say that nobody can produce what we are producing. Yes, there are people who are producing now also, and there will be people who will produce in future also. But
My
yes,
only point.
it has, yeah. So
My
please
only
visit
point.
us. You will really
Sure.
get the
Sure.
real
Sure.
first-hand experience.
Sure, sir. Thank you for that invitation.
Thank you.
Sir, coming to my second question, again, sir, given and last presentation from Meher was really impressive, where we showcased and even showed some videos in terms of how RACL is working on many futuristic technologies. But my only question was, sir, all these futuristic technologies are right now focused on automotive space. Do we have an ambition to diversify the end use application of our precision gears? For example, humanoids is the next big thing which is happening globally. and they have extensive, usage of precision gears in humanoid robots. So my only point was, do we have an ambition or a desire to expand our end application from automotive sector to other futuristic technologies, which of course uses the precision gears and what we manufacture becomes the least common denominator, but the end application could be varied.
In
Do
fact,
we
I
have?
will answer your question in a very, very one line. While our CFO was making a presentation, he already showcased you one page where we announced our technical collaboration with the German company ARRK. These initiatives are in this direction only because we have our own expertise where customer gives us the design and we produce it. Now we we are partnered now with a German company who is designing the product. And they have their own expertise in getting new customers. And it's not only the bigger design houses are not doing only automatic, they are doing in anything. So definitely what you are saying, I really appreciate the thought process or vision which you have asked us. This really a very, very appreciated question from your side. But we have also taken these steps almost 6 months back. And in coming time, you will really see that some fruits are reaped out of it. And you also saw that only last month we participated in a defense exhibition. So in a
Yeah.
defense, defense will not take gears from it. They are producing only bullets or guns or tanks. So
Yeah.
in defense, what comes, we do not know. So it may be even some high-tech drones or even high-tech anything, only time will tell. But yes, these are the initiatives which we are
But
taking to this.
since you talked
Yes, you had something.
since you talked about ambition, so of course ambition is why to just gears? Why can't we make the entire humanoid, right? So that's the ambition we always work with. It is not 1 year, 2 year, it is 10 years. So
Right.
that way is the mission is aligned. Only thing is we have to choose. We cannot be everywhere. So right now we are focused that automotive business needs to grow to a certain level. That is where entire energy and focus is for next 3 years. However, that is for the operational team. We have, as management, already got committed businesses and uh, uh, runway to reach to a level in next 3 years, which we are doing. But any growth beyond that will be, of course, in magnifolds of other than automotive, can be aerospace, can be such robotic industries. And also in automotive, what is to be noted is in last 3 to 5 years, from being a normal component supplier, we have moved up to a system supplier, and now we are also designing products, validations.
Right.
So ambition and plan wise, there are a lot which can be done. We have to choose. We don't have to be, too impatient to grow very fast. At the same time, we should not be having a dud that okay, we'll wake up.
Then on the lighter side, we also have to be very, very cautious that our debt doesn't grow.
Yeah.
Because then your colleague will ask why your debt is growing.
Fair point.
But yes, your point is very valid. One has to always think for the future. And yes, our company is really thinking on many, many such avenues. But definitely, since this the investors call or if, you all of you people are across India are spending time on this call. We always give these information to you once things are maturing. So obviously we
Absolutely.
are also working, our team are working on many, many avenues, many, many new projects. Moment something takes shape, we tell you. And thanks for giving your suggestions. We'll definitely add in our thought processes to think on these lines also.
Thank you. Thanks, Sanjeev. Thank you.
Thank you so much. Thank you so much. That's all from my side. Thank you so much, sir.
Thank
Bye.
you.
Chirag.
Mr. Chirag, you may please ask your question. Mr. Chirag? Kindly
Hello.
unmute yourself.
Hello, am I audible?
Yes.
Yes.
Yes,
Yeah,
Chirag.
thanks for this opportunity. Sir, I have three questions. Question one is on the KTM side. So if you can indicate what kind of ramp up we have seen at the customer end, because we were reasonably positive that a large part of inventory correction would happen soon and even production would start and we would reach to the peak levels sooner than later. So if you can just indicate
First of
where
all,
are we in that phase?
I'll answer you. I'm very glad to share that yes, KTM has started its production, and precisely it started on 22nd of July. And definitely, you can also understand that if a company remains stopped for 6, 7, 8 months, so definitely it will have many challenges. So they are really ramping up. They have ambitions to ramp up, but they are having some supply challenges because they have to. KTM was a global company. They had a global customer base, global supplier base. So they are trying to revamp the entire supply chain, and definitely things are really looking up. And now, since Bajaj is at the helm of affairs, so you can understand Bajaj is a hard taskmaster. So they will definitely put a lot of focus and pressure on uh, bouncing back the company's operation, not only to the past peak, but crossing the next peaks. In fact, only yesterday, you might have seen that they have decided to launch Duke 1290 in India. So definitely now they are thinking to launch all those big brands to India also. So definitely times in the future times things will look up. But yes, right now it's still not at the past performance level. But I'll say, given my thought process, this year when we close it, they will be having around 40-50% of their past year's level. But coming year should be looking very good. But this year they started only, actual production started on 24th July. So, but so far so good because the past 2 months our pickup of the parts was pretty good. But now, this Christmas time is coming. So again, 1 month will always in Europe from mid of December till mid of January, Europe doesn't work. So now let's see. Moment 2026 comes, how it performs.
So, sir, basically you are saying that if you look at YOY or even Q on Q, there is not major revenue contribution. So the growth that we have seen in revenue is is not coming because of KTM. It is the KTM contribution is yet to really meaningfully come.
So I told you, first quarter was zero. Second quarter, they started only on 24th of July. So technically, July was almost gone. So it was only August and September. And initially, they had challenges.
Okay.
They are having suppliers from China, from Japan, from Europe, from Germany, France, of course, India.
So I think the question is, it means other customers are also growing for us. So
Yeah, yeah,
KTM will be a
Add-on, yes.
So, sir, if you can just share, if you can just indicate us this revenue growth is driven by which of the new programs. There would be some volume growth in
It is,
that
yes.
benefit you would have won. So if you can just, because there were a lot of programs which are starting for the different point of time. So if you can just
So
help
there
us understand which programs have actually started contributing to this revenue growth.
So there is absolutely no new project which has contributed to this revenue growth. BMW cars prototyping is happening somewhere. The pickup is good there. Second, many of our existing projects, which were earlier, in last year, our plan was to grow 25-30%. If KTM fiasco had not happened, even then we should have grown 15%. So whatever that lullness in the last year pickups were there, many of our existing projects from customers have shown good recovery signs, maybe because of GST does not have that much impact on us since exports is there. But in Europe as well, and many of our domestic customers also had a good pickup. So that is where that improvement has come in. And YOY, what you also see, to be very honest, last year was not that good. So percentage wise, it looks a bit higher also because it has a base effect. But in general, many of the projects which should have delivered last year were delivering now. So that is how even the H2, that is why we are very confident H2 should be better than H1. And in this, we have not considered any of the new projects to add revenue. If they do, or if KTM increases, then it should be better than what we are expecting. So it is
This is really helpful.
Yeah, it
And
is
the
not.
last question.
Our opening remark was that things are not looking up. Actually, it becomes very difficult to pinpoint exactly where growth is happening, where growth is not happening, where decline is happening. We have to really see the overall scenario. Because there is always a time gap between what we produce today and what is actually used in the field. But there is a gap of almost 4 5 months. So eventually one cannot really predict so closely what is happening today and what is going to happen tomorrow. But as an overall generic feedback is yes, things are really looking up. And that's the reason that our Q2 was pretty good in performance, not only in performance, even in terms of profitability and all stuff, because issue is moment you are at break even, your profitability is different. When you are at 10 plus break even, profitability is totally different.
Operating level.
Moment you are at 20 plus break even, then operating leverage totally is different. So this is how we are also really focusing how we can really leverage our profitability by always creating some delta, positive delta between break even and our actual performance. But overall scenario is really, everything will never go up. Something will go down also. But this is our, again, somebody asked that if anybody can install this technology, then they can also do it. But nobody can have this strategy. We always have a strategy that you are there in everywhere. You are there in a two-wheeler, you are in a three-wheeler, you are in a tractor, you are in a truck, you are in a off-road vehicle, you are in a sea scooter, you are in a snow scooter. Something will crash, something will grow, something will crash, something will grow. But overall, RACL will keep growing. Because even in the first of the year, because last year I will say one of the very, very bleak year, but we still had a notional growth of 1%. And that growth would have not really happened 1%. It would have been at least 15% if KTM would have not gone bankrupt. That was actually one of a lifetime kind of thing. But these kind of events don't happen every day. Otherwise, we would have grown at least 15, 16, 17%, even in the one of the first year. So this is how
The
our
last
business model is, that we are in so many segments. Everything will never grow. Something will remain resilient, something will decline, even with the same customer. Because it's not that if we are working with BMW, so we are working only with one model. We are working with a 310 or 390cc model also. We are working for a 800cc also, 1.2 liter also, 1.8 liter also. So something will grow, something will. Right now, like their 1.3 liter bike is selling like hotcakes. They have, because I was there in Germany a couple of months back, I got to know that now they are committing deliveries to a customer at 6 months level. They launched a vehicle with an automatic auto shift mechanism. When they launched this product, they told that they will be putting around 20-30% vehicles with the auto shift, told remaining with a manual shift. Now situation has occurred. Customers are wanting 100% auto shift. They are not able to deliver. They say, okay, up to 60, 70, 80% will go for this auto shift is really jacking like anything.
We told in last call.
Yeah. So this is how some models will go up, some will go down. So they always keep on changing. But
So last
overall
question.
scenarios are really looking very positive.
So last question on this forex gain in other income. If you can elaborate a bit more. So Q1 was 7 crores, H1 is 10 crores. So is it that it doesn't qualify for cash flow hedges and that's why it comes as in other income, or is there something else to it?
I think JJ, you should answer, but I personally feel this other income is not only the forex.
No, it is not only the forex, because overall was 13. And out of that,
So maybe JJ, if you can answer.
but this is Chirag, as per the accounting standards and all. So basically, the actual gains and all which are there, then the loss on long-term borrowing and the loss on short-term borrowing. So this is basically as per the accounting
But the
standards.
question is, don't you hedge where the income comes?
So basically we avail packing credit in foreign currency. So we do a combination of borrowing in foreign currency and Indian rupee. So we are naturally hedged in a manner that we take packing credit in foreign currency. But because this euro has appreciated and also, of course, the disbursement.
No, I think the answer is because when the invoicing happens, immediately T+1, it gets discounted by the banks. However, we don't remove them from our receivables until the banks receive the money. And that is where this hedging, in any case, is always taken care. And once we do this gain, because eventually that invoicing versus the receiving has a delta to the whatever prevailing rates are, and that is recorded as an income. And in the liability also, you are
No, actually, our system is
Basically, we don't hedge. Basically, we don't
no,
hedge
we
because
don't
it's
hedge.
a natural hedge. Correct?
We don't hedge. We don't hedge because most of our receivables are actually done against packing credit. So within 1 month, our money is taken care of. If we do hedging, for your information, the hedging cost is not less than 2.5% per year. So that is unnecessarily a loss to us. We have found that we always, end of the day, we get gain, we never get a loss. So if we hedge it, so this will reduce our profitability. Actually, I'll answer your question in a very, very clear thing. Hedging people will take where their receivables are pretty long, and then banks normally do not give this kind of credits to them. Because our business is OEM business. If you are doing aftermarket business, if you are working with traders, bank will not give you packing credits. Bank will not give you pre-shipment credits. Because when we are supplying to companies like BMW or ZF or MN trucks, so banks really fight with each other that who gives pre-shipment credit before. So we have a natural hedge. So technically our risk or gain is limited to 1.5 months only. And there also we find that there is always a gain. Because thankfully, or I should not use word thankfully, rupee is really depreciating month on month. And I do not know how the things will really take shape, whether it will have a reverse back, then really we'll see. But today the forecast is that rupee is not going to get appreciated.
Okay, so no, this is helpful. So nothing is there in our revenue item. Everything and almost 100% of the forex gain is sitting in other income. That is the correct understanding, correct? The way we.
Yes, but other income is not only the forex gain.
No, I
Because
understand. I understand, sir. I
that you are
understand
correct. That is the accounting standard. That is the accounting.
as per AS.
That is as per AS. Accounting standard says very clearly
And
that
how much that
whatever
would
is the
be?
forex gain, that is whatever is the forex gain, that has to be in the other income. But JJ, in fact, I also do not recollect. But whatever is the loss, that is so it is after netting.
नहीं,
So if
नहीं,
they-
नहीं, नहीं, वो अलग आता है।
अच्छा, वो अलग।
वो अलग आता है, वो अलग।
वो अलग।
ऐसे आता है, वही-
That is net of net.
We cannot do net netting.
Netting होके आ रहा है, net gain है. This is net gain.
नहीं नहीं, जो अदर इनकम है, नॉन
Other income is after netting.
फाइनेंस कॉस्ट में और एडमिनिस्ट्रेशन कॉस्ट में जो दोनों लॉसेज हैं वो अलग आएंगे ना, तब नेट फिगर आएगी।
There is a loss आ रहा है ना, receivable पे आ रहा है, वो netting
No.
बोरिंग की बात करें सर, बोरिंग।
Operating income. Operating income is also, this is very clearly that whatever is the forex gain, that will go into the other operating income. Now this, whatever is the loss onto the, because there is a loss also, because you are
बोरिंग पे
Borrowing का जो अलग से दे रहा है, लेकिन जो receivables पे netting
बोरिंग की बात करें, बोरिंग का जो लॉस है वो अलग से एक्सपेंसेस है।
that will go, be into the expenses.
Yes.
So accounting standard has this, I'll say anomaly. So on one side we are gaining, other side we are losing also. So netting in the, but while setting the EBITDA, you will get the real.
Yeah,
picture.
that's why, sir, it would be helpful if you can give a separate disclosure in PPT or somewhere because your margin seems to be underreported. आपका loss other expense में जा रहा है और आपका gain other income other expense is a part of EBITDA जा रहा है.
This I think we can do it.
So it would be helpful if you can just call it
out.
out separately.
You can do it like this is forex gain and this forex loss. And then set it.
ठीक है चिराग, we'll consider.
Well, but accounting standard that doesn't permit to.
We'll have to check with the statutory auditor to how.
No, sir. In the presentation that you share, no, over there you can just highlight it.
That will evaluate and maybe we'll come back.
Okay.
Fine, thanks.
So we'll definitely and thanks for good suggestion.
Yeah. थोड़ा fast. Next.
I think last is Mr. Shashank Kanoti. Mr. Shashank Kanoti.
Mr. Shashank? You may unmute yourself.
Hello, am I audible?
Yes.
Yes.
Yeah, hi, good evening, sir. So I just wanted to check, hypothetically, is there a possibility of Bajaj Auto shifting some part of KTM production in India? And if that's the case, how does it bode well for us, given that fact that Bajaj Auto also manufactures from the other marquee brands like Triumph and Husqvarna?
Yeah, I will answer you. We are setting a Christmas tree here. Wherever it is there, we'll grow. If it is in India, we'll start supplying in India. So doesn't matter much. But I'll answer you on a serious note. Bajaj Auto, first of all, it's not that Bajaj is not anything doing even in India. Even now, this 390 Duke, which you already see on Indian roads, is being produced in India only. But for the premium segment, off-road, super bikes, it's easier said than done because it will take a lot of time and strategy for Bajaj to do that. And Bajaj also has taken over this company from a European company. It has a lot of European Union compliances. They have to evaluate all these things. Nothing is going to happen on a tomorrow basis. In future strategies, yes, of course, there will be new synergies being defined. But yes, rather we are seeing a silver lining or a golden opportunity for us. There will be a lot of resourcing opportunities because when KTM was solely a European company, so they had, of course, a mix of Indian suppliers and European suppliers and, of course, Chinese suppliers. Now KTM is an Indian company sitting in Austria. So now Indian companies, Bajaj strategy will be look for resourcing as much as possible in India and as low as possible in China and European. Of course, they have to do the cost benefit analysis because some key products may still remain in Europe, some key technologies or some key components and the volumes and all such still will go. But there are a lot of new synergies and opportunities being explored must be being explored by Bajaj, and we rather see a bit of optimistic view of it. And yes, we have to keep our eyes also open that, okay, moment Indian decision taking takes place, then we have to really see that, yes, then we are not the only supplier, there will be other suppliers of Bajaj also. We have to also see a very balanced, take a balanced view, but we always see that we have a upper edge because we enjoyed 15 years of relationship with KTM and we had a flawless relationship. So even if Bajaj management takes any decision to resource the parts, first choice will be, of course, your company. But of course, we have to compete now against other core suppliers also. But yes, to answer your question, shifting back the production in India, okay, it will not happen tomorrow, but it may happen at some stage, but still not 100% because Bajaj also, because they will like to keep the Austrian unit also fully operational.
Right. And so, in your previous media interactions, you have kind of shared an outlook for a 15% growth in revenues for this fiscal year. Given that we have grown roughly 7-8% first half, do you see that kind of guidance being maintained, given that the second half would be tall as
I've already answered you. H2 will be better than H1. Now he has to prove it. He has to sleep in factory for the next 1 month. So definitely things are looking up. Yeah. Beyond
So
this,
double-digit
nobody
growth
can.
is possible this year in terms of revenue?
Sorry?
So double-digit revenue growth in terms of 14-15% kind of revenue growth is possible this fiscal year, FY26 versus FY25?
Do you have any doubts?
No, sir. I'm just checking, just confirming at your end. So
That nobody can very precisely predict the future. But my colleague has already predicted and said you that H2 will be better than H1. That you can very well imagine that if H1 is doing almost 230 crore. So if you add 230, even by 1 crore extra is confirmed now. So now rather I will ask if you have to really prove it. So double digit growth is coming. But to answer you, yes, we are looking very optimistic.
And so lastly, you've given a 5-year target of 1,000 crores of revenues, right? So that is largely an FY30 target or FY29 target?
Sir, we can't predict 5 years. The target, again, maybe this is something which is good for the Excel sheets. There is a difference between target and a vision. Vision is something which is plotted basis the current scenarios and applications. 1,000 crore is a vision which we want to have within 3 to 5 years. Now, will that happen exactly in 2029, 1st March? We are not there to predict. But the vision is very strong. Our next milestone is 1,000 crores and to be achieved in next 3 to 5 years.
Better. Thank you so much and wish you all the best.
Thank you.
Thank you. I think now you can ask 1 or 2 questions from the open. If there is any, I think nobody is raised on hand.
No.
Was there officer is there?
Abhi sir wo kal diya.
We answered on
We answered on chat.
Okay. Okay.
We answered on chat.
But also is not there.
So if there are no, if anybody is having any questions, they can raise hand. Otherwise, our dice to Neha.
You can give the closing comments, then I'll give the last.
So then, finally, I should say goodbye to all of you, and first of all, wish very, very happy New Year to all of you, because now we are today is 5th of December, so another 26 days away. So countdown starts. So please have a good celebration time for the New Year, Christmas time, and season's greetings to all of you. And when we meet in now in Q4 or maybe first quarter of calendar year 2026, so we'll be having more clearer to our roadmaps of growth and all. And I'm really very, very glad to answer some of very positive questions. Some of the questions highly technical, some of the questions related to the future and giving some guidance for the vision of technically diversification and thinking beyond what we are doing. So I'm really blessed with getting such kind of investors who give us a real insight of the business and very strong financial acumen you guys have. Wish you all the best. Thank you once again. Thanks, Prab. Thanks, JJ, for really supporting with this good numbers. And thanks, Neha. Probably you started this giving the preface. Very well.
Thank you, sir.
Keep it up. Thank you. Thanks to all.
On behalf of the management, I would like to sincerely thank all the participants for joining and engaging with us today. Your participation is greatly appreciated. I would also like to extend a special note of gratitude to the management team for their thorough and patient responses to all the questions raised during the session. Thank you, everyone.
Thank you.
Thank you. And Sadi, thanks to IT team for such a flawless here.